Good afternoon. My name is John Barker. I'm with Sprott Wealth Management in Carlsbad, California. I started there in 2016, and a little bit over a year later, Integra 1.0 was sold to Eldorado, and that was my first sort of experience of watching a company do what's supposed to be done, build a resource, and get sold off for a nice premium. This is Integra 2.0. It doesn't say that, but it's Integra Resources. But the point of looking into that is past success can typically breed future success, and we can very easily follow those guys into the next investment. So please welcome George and Integra. He'll walk you through the story. And again, keep in mind past success and listen to what he has to say. And he'll take you through it. Thank you.
Thanks, everyone. I think before we kick into the presentation, I've got a really quick story to tell all of you, and bear with me and indulge me. It's going to be a quick story, and I'll get it over with pretty quickly. But it's a story that involves the fearless leader of this conference, Rick Rule. So in May of last year, just over a year ago, I was driving down a dusty Nevada highway on our way to visit two of our development assets, Nevada North and Delmare, with Rick Rule. And Rick was on the passenger side of the truck, and we were driving right by the Florida Canyon mine at the time. And I pointed out to Rick that that's the Florida Canyon mine, and just 40 miles to the west was our Nevada North project. And he took it all in, as Rick does. He said, he goes, George, have you ever at Integra thought about acquiring production, actual gold production in the end of the day? And maybe this is something that would be pivotal for the company and its shareholders. Maybe it's something that would put you into producer status. Maybe it's something that would provide the cash flows to fund everything else that you do, so you don't have to dilute on an annual basis to get things done. Have you ever thought of that? And of course, I paused a bit, and the reason why I paused and I choked inwardly was at that time we were doing intensive due diligence on acquiring this asset. And I said to myself, God, does Rick know about what we're doing here? He must know. And in my mind, it was like kind of trying to play poker with the Terminator. You can't win that discussion with the best of the best, which is Rick Rule out there. So I sort of choked back, put on my best poker face, paused, and I said, yeah, Rick, we actually would look at acquiring production at some stage. And then further, Rick went into the whole missive around, well, if you are looking for other assets, he said, choose the right one. There's a lot of garbage out there. There's a lot of stuff that's for sale that really should have never made the light of day. So be choosy about it, but if you pick the right one, it could change your trajectory forever, positively. And in fact, 1 month later after that, we announced the acquisition of Florida Canyon. So what Rick didn't know, obviously he's a very sage, wise person, and the rest is in fact history. We've been in production for the last eight months now. So in Rick's perspective, I think it was a case of foresight. We're dealing with somebody with Rick, who's been in the business for a very long period of time. And I kind of was reminded pretty quickly with that incident, which was, when Rick Rule drops a nugget of knowledge on you, you'd better darn well listen. He's done his due diligence. He's seen hundreds of companies like Integra come and go. And when he says something, you listen. And sometimes when you listen, sometimes, in our case, we were doing the right thing. Postscript, 8 months later, we're in cash flow. We have $60 million in the treasury. We're paying all of our expenses and bills on our development projects without the need to dilute. And this mine for us is doing exactly what we wanted it to do. So we're really happy about that trajectory. As John mentioned earlier, we've got a bit of a track record for us, a bit of a history. Really, the thematic for the Integra group of companies or the Integra brand is pretty much the same. We look at past producing mines. Maybe they've been unloved. Maybe they were closed during low commodity price cycles for a reason. But there's a lot of value in looking at these projects, and that's what our brand was. We did it the first time, as was mentioned, with the sale of a past-producing mining operation in northern Quebec. Well, we started off with a $10 million market capitalization there. We sold the asset for $600 million to Eldorado, and Now it's El Dorado's best producing mining operation. So sometimes things work out quite well. And so that's essentially what you have here with Integra. It's the same flavor, albeit 100% focus this time on America. So that's what we have in terms of our three assets. 100% focus on the U.S. right now. No desire to go any further afield. And, once in a while, the stars do align for companies like Integra. Cash flow from gold production right now, we're selling at near record gold prices. The margins are great. We've got 2 development stage projects and gold deposits. When you add up the cumulative production from these 3 projects, we get to 300,000 ounces of production, or mid-tier status, and that's the aiming mark for us in 4 to 6 years. So all of these great attributes, all within a cluster of about 3 hours drive within one another, again, focused on the western U.S. Lots of synergies to be had between these projects. The one project I will also talk to you about today is the Delmare project. It was our original project, and this is a project that's very advanced. We're on the cusp of releasing a feasibility study, and we are entering federal permitting now, so making it one of the most advanced projects in permitting gold that's not a Newmont or Barrick-owned project. And what can I say? It's the best time in the business right now in memory to be permitting a project in the U.S. There's no doubt about that. So in terms of getting the team together, and I mentioned, from Integra 1.0 to 2.0, there's a lot of commonality. We kept the band together, so to speak, but we did have some gaps in terms of what we needed from a knowledge and expertise perspective. And right now, we built what is now a fit-for-purpose team. And so, I'll talk about a couple of these new additions. There have been several, but 2 of the highlight ones on this slide. We needed a hands-on mining engineer. I'm a geologist by background. I've worked in mining operations, but I don't run mines for a living. Well, this fellow, Cliff Lafleur, he does do that. He's got a long career in doing so, very successful. Cliff comes off a tremendous win at Silvercrest as a mining engineer. Not only was he part of the team that built Las Chispas, but operated it for 2 years very successfully, and which resulted in a $1.7 billion takeover by Coeur that you all know. So Cliff didn't waste any time. As soon as that Silvercrest transaction closed, he jumped ship and came to work for us, which is a real benefit. So now Cliff is really the one leading the charge on the mining operations and on our development projects. The second piece that we were missing, because we're at a key juncture when it comes to permitting at the Delmare project specifically right now. We're in the groove of NEPA permitting. That 2-year clock is going to start for us in the next few months here. And we needed somebody who's been there, done that. And so we looked to Dale Kerner to lead the charge. Dale just left Perpetua Mining. As you know, Perpetua is one of America's biggest gold, silver, and byproduct antimony mines, which just received its record of decision. So Dale knows what to do when it comes to permitting. He's been there and done that with the federal regulators, with the state regulators, and Dale's the one now leading the charge. And so that's just a couple of the new additions in the background, but we now have the team that's clearly fit for purpose. Bit of a commentary here, just three things to point out. 184 million shares outstanding, fully diluted. Is what we have. I didn't mention this at the top of the presentation, but one thing that we love having for the first time ever as a company is a very healthy balance sheet. We've got $60 million plus US in the Treasury right now, in addition to the cash flows that are coming in from the Florida Canyon mine. So a very healthy Treasury position is what we have. In terms of who owns us, the top right-hand side, you can see some of the best and brightest and biggest institutional financiers on the planet right now. I would say that we've got a blue chip roster of shareholders there who have been very loyal and faithful and stuck by us, in addition to some key strategic investors. Alamos Gold, one of the most profitable mid-tier gold producers. I think they've entered mid-tier senior gold producer status. In fact, that's Alamos. So they own us. Wheaton Precious Metals, the world's largest royalty and streaming company, they own us. BD Capital, a very large financing group out of Vancouver, they own us. So you put all this together, we couldn't certainly ask for a better roster of shareholders. And then there's the research coverage aspect. All of the different banks that you see on the lower left-hand corner here, they all cover us. They've stuck by us since the beginning. And I would call ourselves, in fact, the best covered, from a research perspective, company of our size in the business right now. So just kind of moving on to the three pillars of what Integra is today, starting with Florida Canyon. And just to take a step back and take you through that acquisition that I talked about earlier. This might go down in history as one of the best acquisitions, lowest cost acquisitions ever. So if you can imagine, we acquired a reserve and a reserve life of 6 years on an operating mine life that's been in operation for 20 years. And net of the cash at the time of acquisition, this asset cost us $35 million. $35 million is essentially 2 quarters worth of cash flow on this asset. So it was a screaming deal at the right time. I'd like to be able to claim that we were geniuses predicting the gold price, but we certainly weren't. When we started this acquisition, when we started negotiating for this acquisition, the gold price was sitting in at around $2,300 an ounce. By the time we closed it at the end of last year, gold was kind of hanging in about $2,600, and we're now happily selling gold at $3,300 an ounce. So it's been a tremendous win for us. But more detail on Florida Canyon in a bit, but really it is the cash engine that pays for everything else that we're doing, and one that's going to surprise on the upside in terms of longevity as we see it. Moving on to Delmare, our largest resource base, that's 5 million ounces of gold alone. And just to kind of put things into perspective, we acquired this asset from Kinross about 7 years ago, and we paid about $15 million for it, a past-producing asset. Kinross happily produced gold there for about 20 years, shut it down during low gold and silver price environments. When we acquired it, there was no declared resource or reserve there, but we've taken it from 0 to what it is now today, 5 million ounces. So the focus of that project right now for us is to get it permitted and into production. And once it's in production, it's producing 130 to 140,000 ounces a year at what we believe will be very low costs. And then right next to that, right behind that, Nevada North, a project that's maybe 1.5 to 2 years from a permitting and development perspective behind Delmare. But Nevada North is going to be a super simple project to build and operate, a really low-cost build, a really simple to build and operate heap leach, really low strip ratio. But I think the biggest thing from a synergy perspective is Nevada North sits about 40 miles due west of Florida Canyon. And think about the prospect of us taking a 280-person workforce from Florida Canyon and taking all that expertise that they have and deploying them 40 miles to the west. They don't have to move house. They can just go in a different direction when they wake up in the morning and leave their houses. Well, that to us will provide tremendous benefits for us going forward. It's really great to have this great workforce in place. So this is what we're looking at. In fact, the investment premise for us is pretty simple. It's the cascading effect of Florida Canyon, 70,000 ounces a year production. Perhaps we can grow that bigger. Moving to Delmare, add another 130, 140,000 ounces. Well, then we're past the 200,000 ounce mark there from a production perspective. And then add Nevada North onto that. We're then clearly in the 300,000 ounce per annum mark from a production perspective. And I can tell you that's clearly in mid-tier producer category. And that's the aiming mark for us and our shareholders. So, question I get asked a lot, what's Florida Canyon all about? When did the turnaround occur? And by our own due diligence, when we were looking at this asset, at the same time I was driving down the highway with Rick in the truck, one of the things that jumped out to us occurs in the upper left-hand corner of this graph. And it's that teal-blue spike in production. And that teal-blue spike is related to run-of-mine ore addition to the heap leach. Now, there are two types of ore, generally speaking, in the heap leaching business. There's ore that you have to crush and then put on the heap leach and recover gold. And there's ore that you can take straight out of the open pit, bypass the crusher, and bring it straight to the heap leach. And we're talking about the latter here. So the recognition of that kind of material at Florida Canyon is really what allowed it to turn a corner and get to a record level of production for the last 2 years. And we think that that will continue. We think, in fact, that there's scope to do lots more in terms of run-of-mine additions. So there'll be studies that are ongoing there that we'll be releasing to the public. I do have to say at this point, in terms of who was responsible for that turnaround at the mine site, it really was the mine site, the mine management team, and the tremendous work that they did there. And they continue to do excellent work for us. Very recently, we put out our cost guidance for the mine site. One of the things that people were looking at was, obviously, does the company believe that we can maintain this level of production? The answer is yes. Guidance we put out there was 70 to 75,000 ounces. Total cash costs of $1,800 to $1,900 an ounce. The AISC then jumps to $2,450, and the reason why it goes up to that level is for the first time in many, many years, this mine is seeing reinvestment. It's an asset that is, largely speaking, has gone unloved during low gold price environments. So we're injecting from cash flow $60 million back into this mining operation to make a bigger, better, longer life. And so the fruits of that labor will be coming out as we progress. One of the things that we pride ourselves on is, from an exploration perspective, finding more ounces. We believe there's lots more to be had here. We've got a 10,000-meter, 30,000-foot drill program on the go right now. We'll be releasing those results over the course of the summer and into the fall. But I can tell you that there's a very high likelihood that we can add many years of mine life to what is currently a 5 to 6 year mine life. Again, amazing to think that we acquired this asset for just $35 million. On to Delmare, again, our largest asset in terms of resource endowment, production profiles. 2022 pre-feasibility study. That's what it looked like, a really steady production performer. We think we can add to that in the upcoming feasibility study. Again, this is one of those projects that is entering permitting from a federal perspective right at the right time and the best time in America to be permitting assets. Same for Nevada North, a very strong project, 80 to 100,000 ounces a year from a production profile. Very low cost to build this project, dead simple to mine, really easy metallurgy. And again, having an operating mine that's just 40 miles down the road from this is a real benefit to us. Just kind of moving on to some of the comparisons or benchmarking that we do often amongst our peers. Note that we are new to the junior production space. We've only been in this space as a producer for 8 months now. But this is what the landscape looks like. Our market capitalization is $300 million, roughly speaking, where compared to our peers who have been in that space for a very long period of time, that's low. So we've got some catch up to do here. And I think, quarter over quarter, demonstrating production out of Florida Canyon, growth, all of those things, we'll get there. One of my favorite slides is this on the upper right-hand side. You compare us to companies that have $2, $3, $4 billion valuations. We rank fourth with 10 million ounces of total gold endowment there. So we're really well positioned to do it. And last but not least, what happens again if you start taking all of these development assets and you put them or you tag them on to Florida Canyon? You go from 70,000 ounces to 200, and then 200 becomes 300. And that, again, is the aiming mark for us. And then kind of into the analysis nitty-gritty, our price per net asset value. We're trading at a PNAV, as they call it, of 0.3, where our peers are trading at 0.6, implies a double. How do we get there? Again, we're new to this space, showing quarter after quarter, consistent production, consistent cash flow, paying our bills, not needing to go back to the drawing board when it comes to raising money. No need to dilute. All of these things are tremendous benefits for us. There's a couple of things coming up the pipeline as well in terms of news. Potential GDXJ addition in the next 6 months maybe. We don't have control over that process, but I can tell you that we make all of the criteria necessary to be part of the GDXJ. That could be a pretty pivotal event for us as well. So what I'm saying is in the near term, very near term, we have a strong conviction that there's a double there. And then last but not least, sort of all the key ingredients that we have at Integra right now, they're all there. If you like production, we have production. If you like growth, you like we have growth, exploration upside. We think that there's lots more to be done at Florida Canyon on that end, and lots of permitting news to come as well. And so just to kind of, end things off here, I think you'll all agree in the room that if you knew Integra as of 6 months ago, it was a very different company. We are a very different company now. We're cash flowing. We have $60 million in the treasury. We have cash flow from a mining operation, which we're re-injecting back into a mining operation to make it bigger, longer life, more optimized, more robust. We have these development projects that are world-class. And we've got some permitting to do at the absolutely right time in America to be permitting new mines. And I invite you all to join us in this journey. Thank you very much. Thanks.
Congratulations on the Florida Canyon acquisition. I can see it clearly very transformational. So if Dale Kerner, if I got his name right, he's working his magic again like he did for
Perpetua. Yeah.
Right. For Perpetua. What sort of timeline for Delmare would you be hoping for?
Yeah, okay, sure, I can spell things out for you on that end. So we just completed a trip to D.C. under the new political administration. We've been dealing with the Biden administration up to now. Now we're dealing with the Trump administration. And they're seemingly a lot, they want to go faster on things from a permitting perspective, and we see that in the executive orders daily. They have given us a timeline where they get back to us quickly with responses. Long story short is notice of intent to proceed this fall sometimes, and that starts the 2-year clock, start to finish. So count 2 years to get our permits from sometime this fall up until the end of 2027 sometime is kind of the latest estimate there.
The permit by 27, end of 27.
Yes.
And then you start construction, or can you start?
We can start construction at that. On ancillary construction, we do need to get state-level permits to do certain other things at that stage. We're trying to get as much of that stuff synced together as we can.
So early 27, you start construction.
Early 28.
Early 28.
Correct, yeah.
And then how long the construction?
12 to 18 months is kind of what we're looking at. Yeah.
29.
Yes. Other questions? Yeah. Why was it a distress sale? So Florida Canyon was acquired by Alamos Gold. Alamos Gold are used to mines that produce 300,000 ounces a year. For them, 70,000 ounces a year was not a material to them, so they put it up for sale. And in fact, other assets that they then at that point owned as well, including some Mexican assets as well that were too small. We're good? All right, thank you very much.